Good afternoon, ESB students. I am Mr. Maloney, and we are going to cover the ESB exam. The most important part is the business financial. So I'm going to review the math section of the ESB certification exam with you. So here we go. We're in geometrics. So the first question we're going to bring up is you are examining the year-end balance sheet for your business. According to the information in the balance sheet, what is your equity in the business? Well, equity is the difference between your assets, which is value, and your liabilities, which are bills. So all these other numbers, cash, inventory, equipment, credit card balance, long-term debt, unearned revenue, means nothing in this problem right here. This is strictly a subtraction problem. Total assets minus total liabilities, which would give you $11,000 in total equity. So make sure we're not going to, just because there's numbers on the page doesn't mean they're part of the formula. Assets minus liabilities will give you your equity. And there you go. The next question. You operate a small insurance office with a partner. Which expense is a fixed cost? Fixed cost meaning it is going to be the same every month or every year. Paycheck for an hourly administrative assistant, that is not a fixed cost because an hourly administrative assistant may work 40 hours this week, may work 20 hours next week, so it is not the same. Property lease for an office, usually leases are a year, 2 years, 3 years, 5-year lease. So that cost should be the same year after year. Water bill for an office. A water bill is not it is a fixed cost, but it's a variable cost because it could change depending on how much you use each month. Cost of paper supplies, who knows how much paper you're going to use. So of these 4 questions, the only one that is a fixed cost is the property lease for the office because that price will stay the same or be consistent over a long period of time. Okay, on this question, you recently started a small affiliate marketing service. Last month, you spent $1,000 on a pay-per-click online advertising campaign that resulted in $1,200 in sales. What was last month's return on investment for your affiliate marketing service? So return on investment, we know that's going to be a percentage, and that's going to be, we're going to have to divide. So right off the bat, you see 2 numbers, and you're going to want to divide those by each other, and that's going to give you 83%, and that is an incorrect answer. The way we want to do this is you spent $1,000, made $1,200. So what was your profit? So your profit was $200. So you spent $1,000 to make $200 profit. So what you're going to do, we know that's going to be 20%, but let's see. So we got $20 divided by $1,000. Oops, $200, correction. $200 divided by $1,000, and that gives you 0.2. 0.2 is 20%. So we got to make sure when we read these questions, look for what they are asking for, your return on investment. That's not $1,200 profit, that's $1,200 in sales. It cost you $1,000, so your profit was $200. Okay. Next question. A barber charges $20 per haircut. The total cost for running his home-based business is $4,000 per month, which includes his salary of $3,000 per month. The minimum number of haircuts he must do to cover these expenses and his salaries is $200 or $200 per month. So currently he must have 200 appointments, charging $200 a month to make his $4,000 a month. That $4,000 a month gives him a $3,000 a month salary. The barber wants to increase his salary to $4,000 per month, making his total monthly expenses $5,000. What is the minimum price he must charge for each of the 200 haircuts so he can cover his increased salary. So we have all these numbers up here, but there's two numbers we have to worry about. What is the question? What is the minimum price he must charge for each of the 200 haircuts so he can cover his increased salary? Okay, he wants to make $4,000 a month. That means nothing. We need to get to this $5,000 a month. So how do we figure out 5,000 divided by 20 will give you the answer? So $5,000 a month divided by 200 haircuts will equal $25 per haircut to meet his requirement. So the reason I'm going over this question, which expense is a variable cost? Well, a few questions ago, we had fixed cost, and we had an hourly rate for an office assistant, which was not a fixed cost. It must be a variable cost. So here we go. We got two questions that are basically the same, and we've got the same answer here, right? That is a variable cost. The purchase of a new copying machine, that's a one-time cost. Insurance payments, insurance is a fixed cost. It's usually the same every month, and so is rent. So we only have one logical answer, and that is hourly wages, because that can vary based on how many hours you work. All right, in this question, you own a handyman service business. You have the following financial information for the month: initial cash balance, projected revenue based on existing clients, so that's how much you are projected to make this month. And these are your expenses: gas, equipment maintenance fees, truck payment, payroll, and insurance. What is your projected ending cash balance for the month? So this is a two-part question. First, we must add up our initial cash balance of $1,500 and add that to our projected revenue, which is $2,500, which will give us $4,000. And now we must subtract our expenses. So equipment maintenance fees, so we're going to subtract $300, and we're going to subtract $400 for truck payment, and then we are going to subtract $3,000 for payroll, and we're going to subtract $120 for insurance. Oops, I hit subtract twice. So we'll go back to 4,000 minus, that's 800, that's 3,800. So minus 3,800 and minus 120, which will give us $80. So let me review that in case I just confused everybody. So we have $1,500. Then we're going to add the $2,500. Then we have to subtract our expenses, which is gas, equipment rental fees, our truck payment, our payroll, and our insurance. And that equals $80. Make sure when we're using the calculator, we don't hit the buttons twice, because two negatives equals a positive, and it'll mess up your answer. But the answer is $80. So on this question, you take your cash balance plus your projected revenue, add those together, and then you subtract your expenses. And this is what your cash balance will be at the end of the month. It's $80. So here's another question that is the exact same question as the one we just answered, except it's in a multiple choice format. What is the formula for determining ending cash balance? Ending cash balance is equal to total cash minus total cost, just like we just did in the previous question. All right, on our next question, we are talking about percentages and creating a sales price based on profit margin. So Tina owns a car dealership. She just received a shipment of luxury sports cars. She paid $50,000 each per vehicle and wants to make a 25% profit on each car sale. What is Tina's selling price? Okay, so another two-step problem. First, the cost of the vehicle is $50,000. She wants to make a 25% profit, so we must multiply by 25%, which is 0.25, which means that is a $12,500 that must be added into the price. So we take that $12,500 and we add it to the $50,000 for the price of the car that she paid. So she has to sell the car for $62,500 in order to make a 25% profit. There we go, 62,500. Very similar question as the previous question. James owns a sporting goods store. He manufactures his own bicycle brand and needs to figure out what the selling price should be. The manufacturing cost per bike is $65, and his desired profit margin is 15%. What is James' selling price? So it's the same formula as the previous question. We have $65 is what it costs to make the bike. He wants a 15% profit margin, so we're going to multiply by 0.15, which is 15%, and that gives us $9.75 profit per bike. Well, we add the $9.75 profit to the $65 cost, and that means he must sell the bicycles for $74.75. All right, another question that is the same as the previous two. If you notice a trend, these are the types of questions on the test that we must know 100%. So Devin owns a clothing store, recently purchased jeans to sell in his store. He paid $23 for each pair of jeans, and his desired profit margin is 18%. What is Devin's selling price? So same formula, he paid $23. We're going to multiply that by 18%, which is 0.18, and that gives us a $4.14 profit. We're going to add that $4.14 to the $23 he paid, so he must sell the jeans for $27.14 in order to make his 18% profit margin. All right, a question that goes back to the first question we did about equity and assets. Amanda is the owner of a flooring company. Her assets include $15,000 in cash, $10,000 in inventory, and $5,000 in equipment. Her liabilities, which are bills, include $6,000 credit card balance and an $800 in long-term debt. What is Amanda's equity? So just like in the first question, we must add up the assets and subtract the liabilities to come up with the equity. So first, we're going to add up the assets. So her assets are $15,000 in cash plus $10,000 in inventory plus $5,000 in equipment. So her assets are $30,000. Now, her liabilities is $6,000 credit card. So we're going to subtract $6,000 and an $800 in long-term debt. And that gives us $23,200 in equity. Here we go with another equity question. Holden owns a restaurant. His assets include $6,500 in cash, $2,400 in inventory, $8,000 in equipment, and $15,000 for a delivery vehicle. His liabilities include a $3,500 credit card balance, $2,200 in bank loans, and $12,500 in mortgage payments for the restaurant. What is Holden's equity? So, two-part, we must add up his assets. So we have $6,500 in cash, $2,400 in inventory, $8,000 in equipment, and $15,000 in a delivery vehicle. So his equity or his assets are $31,900. His liabilities is $3,500 that we must subtract. $2,200 in bank loans and $12,500 in mortgage payments, which gives an equity of $13,700. Ben owns a print shop. Last quarter's income was $8,000. His cost of goods were $650 and his total expenses were $4,300. What are Ben's net income and gross income? Well, net income is after all the expenses. So for that part, this is two parts. So we have $8,000 minus $650 minus his $4,300. And that gives us $3,050 for net income. So we have one of three answers. So obviously answer 4 is incorrect. Now we have to figure out what his grossing the last two questions or answers are wrong or out, can't be used. So now we have a 50-50 between A and B. Okay, so now let's figure out gross. Gross is his income minus the cost of goods. So that'd be $8,000 minus $650, which gives $7,350, which would be B. All right, Melody owns a dog grooming business. Her total monthly cost is $2,750. She charges $25 per grooming service. How many dogs must Melody groom to break even each month? Okay, so this is a break-even point. This isn't making money. This is breaking even. How many dogs must she groom to equal $2,750 each month? So what we're going to do is we're going to divide $2,750 divided by $25, and that gives 110. So she must groom 110 dogs to break even before she can start making a profit. All right, same question with different numbers. Tom owns a hat shop. His total monthly cost is $1,850. Each hat costs $50. How many hats must Tom sell to break even each month? So we have to take $1,850, which is the cost to doing business, divided by the cost of the hat, which is $50. So you must sell 37 hats in order to break even before any profit is made. All right, here we go with a cash balance question. Haley owns a bike shop. She is preparing the cash flow statement for her first year of operations. She had a beginning cash balance of $4,700, $101,000 in total cash sales, and then she had $3,300 for utilities, $2,200 in loan payments, and $5,600 in marketing costs. What is Haley's cash balance? All right, again, two-part question. First, we must add up her cash and her cash sales. So $4,700 plus $101,000, which gives us $105,700. Now we have to subtract her expenses. So we're going to subtract $3,300, $2,500, and $5,600, which gives us a ending cash balance of $94,300. All right, we're going to calculate burn rate. Jerry owns an ice cream parlor. His starting balance last month was $1,900. His ending balance was $2,200. What is Jerry's burn rate? So starting balance last month was $1,900. At the end of the month, he had $2,200. So burn rate is how much are you going through your cash flow. So he had $1,900, and we're going to subtract the $2,200. So he had negative $300 burn rate. What the negative means is he made money. burn rate is an expense, so it could get confusing. So what you want to do is you subtract the beginning from the ending, and now we'll give you your burn rate. So his burn rate is a negative $300, which in this case is a positive. All right, here we go. Same type of question. Larry owns a shoe store. His starting balance last month was $17,300. His ending balance was $14,700. What was Larry's burn rate? So we're going to find out how much money did Larry burn through. So he started out with $17,300, and we're going to subtract $14,700, and that's what he ended up with. So he spent $2,600, and that's how you figure out the burn rate. The starting balance minus ending balance. All right, so we're going to cover run rate. Jake owns a garden supply store. His revenue at the end of last month was $12,200. What is Jake's run rate? So run rate is how much over a year, so 12 months. So we're going to multiply $12,200 times 12, which gives us $146,400. So the run rate, here's the formula, is how much you make over a year revenue. All right, sells gourmet boxes of chocolate, 1 box of chocolate. All right, so Claire sells gourmet boxes of chocolate. 1 box of chocolate costs Nancy $6.75 to produce. Sells her box of chocolate for $10. What is Claire's return on investment, ROI? So $10 minus $6.75 equals $3.25. Now the cost to produce, we're going to divide by the $6.75, which gives us a return on investment of 0.48 or 48%. And there you go. Okay, Danny sells skateboards. 1 skateboard sells for $55, and the cost to produce the skateboard is $35. What is Danny's return on investment? So the return on investment is he invested $35 to make $55. So his profit is the difference between $55 and $35, which is $20. So $35 to make $20 profit is what your ROI is. So here's how we calculate it. So we have $55 is what we're selling skateboard for. Costs us $35. So we have a $20 profit. Our cost is $35. So that means we are making a 57%, 0.57, which is 57% profit. So we produce a skateboard for $35, make a 57% profit, sell it for $55. There we go.